Hello, everybody. It's good to see such a huge crowd gathering for this talk. Anyway, I hope I will entertain those that are present. I will tell you about how to build a unicorn. At least I will share with you our perspective as a VC firm. So unicorns. Probably everybody present in the room knows what is called by the name unicorn. But you should realize unicorns in startup land is a reasonably recent phenomenon. They were they were very rare until 5 years ago. I think Facebook raising rounds valued at over $1 billion and then IPOing at $100 billion made the idea of unicorns, of private financings at a very high valuation more palatable. And you see that starting 2014, a huge amount of companies has been added to the unicorn club. So unicorns are companies that raise private financing at a valuation over $1 billion. Historically, it has not been a pattern. Companies that are valued at $1 billion or higher usually would be sold either to the public through an IPO or to a strategic buyer. This is a recent trend. It's driven by many factors. One of the factors is availability of money, search for growth. There were not that many areas to invest capital in the world in the last 5 years that would generate good returns. And second, the example of Facebook. Everybody wants to have another Facebook, invest at a $5 billion valuation and sell at a $100 billion valuation. So let's look first at where those unicorns are grazing. I'm using pictures from CB Insight. If you don't know what that is, and you like startups, I recommend subscribing to them. It's a very good newsletter, very popular. CB Insights have lots of stats. So as of May 5th, I think it's American notation, yes, as of it's European. As of May 4th, US had 102 unicorns, mostly located in Silicon Valley, with a few in other spaces. There are some states that have no unicorns at all. There are some states that have zero investments in startups at all. I think like 5 states where there are 0 startups, including Alaska, Arkansas, and a few other states. California is definitely the top state in terms of unicorns. If you look outside of the US, there are fewer unicorns outside the United States, 91 for the rest of the world, concentrated in China, in India, and in a few other geographies. So US is clearly leading unicorn pack. This one, actually didn't finish the slide, but I'll talk about this. So I cannot go through the 200 plus unicorns to look at them and analyze them in a half-an-hour talk. So I figured let's focus at unicorns from 2016. It's very recent. Companies were added to unicorn list just last year. There are fewer of them. Only 35 startups were added to unicorn list. And actually, the pattern is a bit changed last year. 21 startups became unicorns outside of the United States, and only 14 in the United States. I actually didn't finish this slide. I wanted to put another graph next to it. Another graph would show the number of startups we see as venture capitalists in different areas. So on this slide, it shows that a lot of startups, majority of unicorns, are kind of similar. They do not invent anything new. So it would be companies like an Uber for China, an Uber for India, an Uber for Indonesia, Airbnb for India, etc. A lot of those. But quite a few of unicorns, I would say about 35%, develop really new solutions. Either they develop completely new industries or disrupt legacy industries. Now, when I wanted to add another graph showing our pipeline. So for us, we as VCs see that 95% of companies that come pitch to us are doing something that's already been done. So they're doing an Uber for Poland, roughly, or Airbnb for Hungary, or doing some model that's been done before by somebody else, and only a few percent are really doing something breakthrough in new areas of technology. So from this perspective, if you look at the funnel, where you start with and where you end up with, it's very clear, for us at least, that you have much better chance of building a unicorn if you're either trying to disrupt a legacy industry or create a new breakthrough. I'll just talk to you about several unicorns from 2016 out of those 32. I'm not sure you know every unicorn, so maybe you'll find it curious, that demonstrate what kind of companies that do breakthroughs, they raise the unicorn status. So, and why? One of the companies is called Quanergy. Quanergy raised almost $130 million to date. Last valuation was at over $1.5 billion. As is typical for US unicorns, company like that would be loss-making with very limited revenue. And the reason why it's so expensive and why it raised so much money is because it's fighting in a new industry that's emerging. So what Quanergy does, it makes LiDARs that autonomous vehicles use to navigate around. Autonomous vehicles is vehicles without a driver that drive by themselves. So venture capitalists are betting that in a few years from now, most cars will be autonomous, maybe 3, 5, 7 years from now, and they will be using Quanergy as a necessary ingredient to ride around to orient themselves. So that's why everybody's putting money there, because everybody's thinking, where will be the future in 10, 15 years? What will happen? And what will be needed for that? So these guys are very expensive. This is, I like the most from the new batch of unicorns. It's a company called Zoox. This is their website. So there's nothing else. So you go to the website, it's black. It says Zoox. They raised $250 million at a valuation of over $1.5 billion. There's no website. They have an office in Silicon Valley, but there's no name of the company on the office. They have no prototype yet, no product to speak of. They're in stealth, valued at $1.5 billion. What they do, they also build an autonomous vehicle. Smart guys who know automotive, but they say, okay, we'll build an autonomous vehicle because every vehicle in 10 years will be autonomous. Let's build expertise. And capitalists go and give them $250 million at $1.5 billion valuation. No product, no revenue. Product will be ready maybe in 2-3 years because it's a forward-looking industry. This one is simpler to understand. It's actually a product. Many clients are already using Domo. It entered Unicorn Club last year. It's a cloud-based business intelligence platform, fast cloud-based business intelligence, raised almost $500 million. Last valuation, $2.3 billion. Now, business intelligence is nothing new. Business intelligence has been around with us for decades. What's driving Domo's success is the growth of cloud. If you follow what happens to the compute, a lot of compute is shifting from on-premises to the cloud, to Amazon, to Microsoft, to other clouds. And applications are moving from your desktop to cloud applications. Since Domo is riding that wave, they are managing to raise this much money and at these valuations. Another example is a company called Forescout. Valuation $1 billion, raised over $140 million. These guys are not making any new industry. They are operating in an old industry, in cybersecurity. So cybersecurity, again, old industry. Why would these guys raise so much money? Why would they be so valuable? You have RSA, you have Symantec, you have Kaspersky, ESET, Avast, tons of companies in cybersecurity. What is driving this company? Well, these guys actually ride the same wave, the wave of cloud, growth of cloud. Another wave is loss of enterprise perimeter, where 10 years from now, you knew everybody who was on your corporate network. You would come in, you would have a computer, it's plugged into with a cable to the network. Your administrator knows, okay, we have 5,000 computers on the network, they have recent patches installed, everything is connected. These days, you can access your corporate network from Starbucks, you can use your mobile phone to access it, you can bring some Wi-Fi device to your job, can connect via Bluetooth. It turns out that over 30% of devices on corporate network are now invisible to IT specialists. They use new protocols and new ways of connecting to the network. Forescout just makes those devices visible without installing anything on devices. And because they deal with a challenge that's new, it's a new challenge, everything moving to the cloud, mobile devices, they're able to raise $140 million at a huge valuation. And the final example on unicorns, just to drive a point, another security company, another billion-dollar valuation, another raise of $175 million. Why? This is an endpoint security company. Venture capitalists will tell you that it's impossible to raise money for endpoint protection because, first of all, there are 100+ companies that provide endpoint security. It's highly competitive. You have, again, giant companies like Symantec that provide very good service. So why Silence was able to be so successful? Well, they use new technology. Silence integrated artificial intelligence neural networks and applied this concept to endpoint security. It's a new technology. It enables a company to protect from different threats than before. So the wave of the growth of tools for using neural networks, the growth of AI instruments, when applied to an old industry, enabled them to provide sufficient differentiation to become a successful unicorn. So it's half the talk. I want to do intermediate conclusions. As we have seen, dominant geography for unicorns is the United States. I didn't show you this data, but trust me if I tell you that there is a much lower chance of success in building a unicorn from copycats and Me Too companies. If I look at our pipeline, as I said, over 90% of the companies are not trying to build something new like Zoox or something. They're trying to improve something that already exists. Make a better, I don't know, Microsoft Word, a better program managing software or project manager or a better messenger. So very few companies try to do something that breaks out, and the success rate is much higher there. So this is one of the recipes that we recommend you guys try, is target the US market where unicorns are going, because that's where the clients are. It's the market where it's easy to sell. And go for building an industry, a leader in an emerging industry. You see, IT, every couple of years, the IT market is changed by new waves of new technologies, new architectures, new platforms. You can ride that wave to build a new company. And if you try to do that, focusing on US markets, you have a much higher chance of success than if you try to build another Uber for Poland along 5 other companies. However, unicorns is not the end game. If you follow startup literature, you will see that there's lots of gloom around unicorns. People say that there's too many unicorns. There is no way there will be enough liquidity for investors. People will have to write their money off. They will have to sell companies at a lower valuation. It will be a loss. There was too much money pouring into unicorns. The ultimate success for investors, for startups, is getting to liquidity. Getting to liquidity at a $1 billion+ valuation is pretty hard. There's not that many acquisition deals going to those valuations. So IPO becomes sort of the dominant exit for a company that's valued at over $1 billion. Clearly, there were much fewer IPOs than unicorns created in the last 5 years. So let's look at what companies actually get to unicorn, to IPO status in the US and tech IPOs. I looked at IPO filings from 2016, from the beginning of 2016 to May of this year. There were 12 technology IPOs on US exchanges. Some of the companies you know very well, probably, like Snap or Twilio. Going to IPO is very good for us and for you. You can look at the companies that went public, and they describe a lot about their business model, about their financials, how they grew, who their customers are. So I would really recommend you going and using SEC filings of successful companies. Like it's called Form S1. Just download it. It's freely available for every company. So I will walk you through a few more examples of companies that actually IPOed in the last year and a half. Not Snap and Twilio that you know, but probably more representative companies. It turns out that companies like Snap, that everybody knows, that are focusing on B2C products, those companies do not, well, if you look at all the IPOs, most companies that IPO are actually B2B software companies in technology, B2B software hardware, rather than B2C. B2C, everybody knows about them, but it's much easier, many more companies in B2B get to IPO than in B2C. So this is an example of a company that just IPO'd last year, at the end of September of last year at a $2 billion plus valuation. There's a product description. It's pretty heavily technical. I can start to explain to you what hyperconverged infrastructure is, but if you don't know what Nutanix does and what hyperconverged is, I will not be able to keep you from falling asleep in a minute. Trust me, it's a good product. Look at the market. The market was less than $250 million in 2013 for hyperconverged infrastructure products. And in 2016, it was over $1.5 billion. That's the market like that you want to play in. Nutanix built the #1 product in this market. That's the main reason why they successfully did an IPO at a $2 billion plus valuation. How they did it, look at the financials. Last financial year, they had a revenue of $445 million and the cool loss of $166 million. So if you want to get to an IPO and want to grow big in B2B, getting to break even in Q2 of 2018 should not be your goal. Your goal should be to grow fast and to be a leader in a category. Nutanix burned, I think, through over $400 million of investor money to get to this stage. But they were quite successful. Also, look at the geography of sales. This is a category leader in a new industry. You read their S1 form, and it turns out that, yes, Nutanix sells globally, but their global revenue was only 1/3 of their US revenue in 2015. Americans are happy to buy new technology. Europe typically follows. European enterprises want to see an example. Show me who else is using this. It's a high risk. Americans would try it. So American market helped Nutanix. Another example out of those 12 is Cloudera, IPO'd just at the end of April. I'm not sure you guys know Cloudera, but two things I'll point to you again on this slide. Financials, $261 million revenue, $185 million net loss, $2 billion plus valuation. This is so the graphs on the market are from analysts that covered the companies. Again, look at the market. Starting at $542 million annual market, blowing through $1 billion. Now it's about $3 billion a year, and Cloudera is a market leader in this new emerging market. So it looks like a pattern is emerging. Cloudera, again, it says, yes, we are international, great, we are selling internationally. 25% of revenue outside of the United States, and 75% in the US. Cloudera is, of course, probably you have heard about Cloudera, maybe not, but Cloudera is riding on a wave of growth in big data. Cloudera is built on top of Hadoop, used to analyze logs, data logs that all the devices are generating, all the web services are generating. And that's the wave that helped Cloudera raise their capital and help them get to this IPO. I think that's the last example I have. A company called OKTA, again, very recent IPO, 1.5 billion plus valuation, based on 160 million, huge $160 million revenue and $83 million loss. Again, look at the market. Actually, OKTA is a cloud identity company. So the data for the market actually combines identity on-premise with the cloud. The bottom, the blue, is a cloud identity market. And you see it starts tiny, and it hits $1 billion only about 2020. Now it's still under $1 billion. But everybody believes cloud is the future, and OKTA helps maintain identity of different devices that operate in the cloud with your corporate network. Emerging market, it wasn't there 5 years ago. They're targeting this market. They know it will grow. They invest a lot of money, losing a lot of money to maintain leadership position. And they managed to do very well for their investors going public. So if you look at this batch of companies, of the companies that went public and had ultimate success and provide ultimate liquidity for their investors and founders, again, the US is the leading market in terms of revenue, reinforcing the unicorn examples before. Successful companies that you are seeing here are leaders in new markets, in markets that are fast growing and are large. New market growing fast, that's what you want. Market opportunities are created by the continuous technological change. What is happening right now technologically, right? IoT is on the rise. It's, in terms of money, IoT market hasn't materialized yet at the scale everybody expects, but clearly many devices are getting capabilities to talk to each other, to talk to the internet, and we expect IoT market to rise. Mobile has been with us for a while, but given that mobile capabilities are increasing, we see mobiles more and more used as tools for productivity, for work at the enterprise level. So that's another trend. Cloud is there. Cloud for large enterprises is now close to 50% of penetration. So if you look at enterprises that spend, I think the number is 500 million and more a year on IT, already about half of their IT budget goes to the cloud. Half is still on-premises deployment, but cloud is crossed the middle line. So cloud is dominant, and because of cloud architecture, new challenges rise up, and you can solve those challenges and build a new business. AI, AI was there for a long time. I think now it's good, proper to speak about neural networks and the fact that GPU compute became very cheap, became available, and you have software tools to work with GPUs to efficiently, quickly run neural networks. Plus, you get data sets finally to feed and to train your neural networks. That gives rise to new opportunities. And finally, the thing that you probably have heard many times: growth is key. Successful companies have very high growth rates. Profitability is not important. Being a leader in category is very important. So every VC in the Valley will tell you that, guys, we don't want you to, again, be break-even or be profitable. We want you to grow and be a huge part of the market that you are working in. This is why I switched to VCs, because VCs are important to be successful. The companies I discussed, IPOed companies, all had VC funding. In fact, if you look at the largest companies in the world, most of them had VC funding. This is a snapshot from last year. I haven't updated it. Of course, Apple is now more expensive than that, and the numbers change, but you get the picture. VC funding is very important. And at the end of the talk, I want to plug in my fund to tell you that we are helping companies build those unicorns and companies that can go public. And to do that, we operate as a bridge fund. We have a Silicon Valley office. Our headquarters are in Silicon Valley. And that presence helps our companies to recruit right people in the Valley, to network, to be a proper Silicon Valley startup. And our presence in Europe help you feel that you talk the same language with us. We can help you here recruit more engineers and expand your R&D efforts. You operate a unique model when we invest in companies. Every company is supported by two guys, one in Europe, one in the US, so that we can help you on both sides of the Atlantic. And we have over the last 9 years that we've been in business, we've developed a lot of contacts and relationships that we can bring to bear on our portfolio companies. Yeah, we have a lot of good guys working for us across the globe. Yeah, and thank you. I have a few minutes for questions. If you have any, I'll be happy to answer. If you don't, well, there's the website. It has contact information. If you're building next Nutanix or Cloudera, give us a shot. We'll be happy to talk to you and then share ideas. We'll connect you with interesting people, and we'll be happy to invest. Okay.
Okay. Thank you very much.
Thank you.
Again, if there are no questions, it means the presentation was just perfect.
I know.
Thank you very much.